Hi, it's Cory Belyk with CanAlaska Uranium. I'm the CEO, Executive Vice President, and Director for the company. And I'm here to talk about CanAlaska Uranium and its incredible portfolio of uranium, copper, and nickel assets that really are world-class, and we're off on significant discoveries, we believe. Stay tuned, because it sure looks good.
You've got all the buzzwords, haven't you? Uranium, copper, nickel.
It's
not too bad, right?
Yeah.
Not too bad. Hey, look, you're here in Europe, so that's why we're seeing you, London specifically, but you're on a European-wide road show talking to people. I'm sure it's getting a little bit repetitive in telling the story, but I'm interested in what are people coming back to you with? What are the questions they're asking?
Yeah, it's really a varied set of questions, Matt, but I think there's a lot of really educated individuals out there that follow the mining space, but there's also some that do not, and in particular the uranium space, and its importance to that clean energy environment moving forward, and why we need more of it. Simply need more of it.
Well, it's definitely topical at the moment. Obviously, we've come off the back of nearly 18 months of Russia-Ukraine situation, rising energy prices. In fact, here in the UK, prices went up again last night. So people are very conscious of that. So uranium's kind of found its place at the dinner table in terms of discussion. But how does a company like you take advantage of that narrative going on out there?
Well, how do you keep your energy prices down? You need cheap, affordable baseload energy, and nuclear provides that. So it's a fantastic model in that baseload power space to keep those costs down. It's impacting everyone globally, not just in the UK, but in Canada as well. My costs have doubled. So, it's just the right space to be if we want to make a change. Keep those prices down, allow society to do what it wants to do.
Right. So, and I was here at this conference listening to some of the questions being thrown at you, and I think people are talking about, what about all these new technologies? You've got fission coming through, we've got hydrogen as part of the solution. It could overtake nuclear soon. Can it?
I don't think it can overtake it soon, Matt. It's still a ways down the road. It's definitely going to be in the future at some point, but what can we do today to make a difference by 2050, which we need to do? Well, nuclear has to be a larger portion of the clean energy production globally, and that means more reactors, different types of reactors in new and different jurisdictions. And what does that really mean for our business model? More uranium needs to be found to feed those reactors. We need to find the fuel.
For sure. Okay. And I think the SMRs was a big part of the conversation today, and people had a kind of clear understanding of what that could be. So that was interesting on a kind of retail basis. But the other thing that's going to need feeding are some of these big plants at the moment. I was intrigued by page, or one of the pages on the presentation around the fact, like Cameco, where you used to work for a long time, they need to keep feeding those plants in 10 years, in 15 years, in 20 years time. And obviously the restarts will, hopefully start soon. But where the next pounds in the ground coming from? And you're very conscious of that, clearly. You're not going to produce these things, are you?
We are not going to produce uranium.
So what is your model then?
We're out there to find those deposits that are going to feed into those pipelines for these large companies like Cameco or Orano or others that will get it to the market with the utilities to produce that clean energy. We're out there for discovery, the very front end of that value curve, and that's our model. We don't want to produce uranium. That's for big companies, but we can build a lot of shareholder value on discovery,
right? Create
the auction, get it into the hands of the players that will take it forward into the production phase.
Okay, you're talking about the front end of the value curve. Again, you mentioned yourself, there's a lot of newbies in here, not used to the mining space, the vocabulary, the narrative that goes on here. What do you mean by that? Take advantage of that kind of the value curve?
Well, a lot of the value on discovery, whether it's uranium, nickel, or copper, is really coming down to that discovery. You take it from nothing to something. And when you can build a resource very quickly, you can value that resource, start to get that value into the shareholders. And there's a very, very significant upturn right on discovery before you enter the longer phase of putting it into production and then taking it ultimately to production. So, it's really about front end, low shareholder dilution to go out and make discoveries, bring in partnerships. There's other ways to do it. Project generate, create new ideas, new projects that get it toward discovery and bring them in to help de-risk it.
Well, sorry, before you go on, let's talk about that specifically, because most shareholders are worried about shareholder dilution. You've got to raise money, issue more shares, they're diluted just to do what you need to do with your portfolio of products. So you've got a suite of uranium. We'll get onto copper and nickel in a minute. You've got a suite of uranium projects in the Athabasca Basin. It's where people want to be. How are you tackling each one of those? Because you've got to throw a lot of money at these things, right?
Yeah.
Just to find a discovery. Make a discovery.
Absolutely. It's extremely rare to make a discovery. It's extremely rare, even more so, to actually make a discovery that matters. And we've got multiple discoveries in that portfolio.
Don't all discoveries matter?
All discoveries matter, but very few make it.
Meaning what? Economically?
Economically, very few make it. And so we're not tasked with finding mineralization. We're tasked with finding an economic ore body, or one that could be economic. Okay. So, to go out and find mineralization doesn't do much good. What you need to go out and do is make a discovery that makes sense and is big enough.
So give me more there.
Creates a lot of value for shareholders.
Okay, so give me more there, right? Because that's interesting. Because you're now saying to me, I shouldn't get excited when companies kind of declare they've made a discovery, which is hard and
Very
rare,
hard.
right?
Yes.
But when they've made that announcement, you're saying, oh no, don't get too excited, Matt. Don't get too carried away, because they're not all going to stand up.
Well, get excited. Get excited, because a discovery is a discovery. But then you have to start segregating out which are the real discoveries versus which ones, aren't.
How do you do that?
It takes work. It takes work from our perspective. And from a shareholder perspective, follow the teams that have success. Follow the teams that are generating results, maybe on multiple fronts.
Right.
Over the last little while, like ours, where we've got multiple discoveries within that portfolio in the Eastern Athabasca.
How many have you got?
Oh, lost count, Matt. But we're working on one at West MacArthur.
Okay, show off.
We're working
more or less than 10.
We're working with our partner Denison at Moon Lake South. We've got another new discovery at Waterbury South, the polymetallic uranium zone. So we've got multiple discoveries on the go in our portfolio just in the last couple of years. Most importantly at West MacArthur, their Pike Zone. And we've drilled up to 25% uranium there. So,
who's paying for that, though?
Pretty good. We are.
Right.
But that's because the project's responding to our exploration. So this is part of the hybrid model that we deploy as a company, whereby the projects that are responding to our exploration spend, we continue with.
Right.
Others that are higher risk, maybe early stage or project generated, we'll invite partnerships in to help de-risk those toward that discovery.
So what would a return?
It's a balanced approach.
It's a balanced approach to the portfolio, right? So risk mitigation, I get it. But in terms of return on capital invested, which is what we kind of care about, are you spending your money wisely? So prospecting, give me an example of what's worked.
What's worked? Utilizing brand new geophysical tools to retarget on old targets.
Right.
And what that's allowed us to do is go out and drill holes that have changed our knowledge, and ultimately working toward a discovery, like Pike Zone. That's exactly what's happened.
But what's it? You talk about this optionality about how you finance these things, right? So you're going staking, and then you're doing the geophysical work, whatever you do to kind of evolve it, say identify targets, which become anomalies, which become discoveries. Hopefully, it sounds easy, doesn't it? Yeah, I should give it a go. Again, comes back to that money side of things. I get the higher risk ones you want to outsource. Use someone else's money. But you manage it? Is that the kind of
we can
try to?
One model is that we will operate it for those companies. Another model is they may operate it, but we want to retain enough interest and in those deals or royalties or whatever it might be. That upon success, our shareholders can still,
what's that look like? You kind of get free carry and you get some NSR on it, or how do you?
Yeah. So generally, let's say we start with 100% for our project. We invite a partnership in. They can earn up to 80%, let's say, of that project by spending whatever you can agree on that should be spent to move it toward discovery. Ultimately, getting drill holes in the ground. That's the only way that you make a discovery, is by drilling holes. And we can't do it all. With a portfolio of over 300,000 hectares in Eastern Athabasca, we can't do it all. So we bring in partnerships on those projects that we don't want to focus on today. They're still great projects, but we can help use others' investment to de-risk them toward that discovery.
So how do you know what you need to do? How do you know what's going to be attractive to a major? And what is attractive to major?
Well, that comes with experience, Matt. And on our team, we've got that experience. I'm ex-Cameco for 25 years.
Right.
I've been in all parts of the business unit there, from exploration to mining to corporate development, running overseas offices. So we know what we're looking for. Been part of discoveries in the Athabasca Basin over the years.
Yeah.
I brought in a vice president of exploration from Cameco, over 10 years with Cameco, part of other major discoveries, including the nearby Fox Lake zone, near our Pike Zone discovery. Yeah. So, you've got to lean on that experience. And, I often use the phrase, this looks right.
Right.
I've used the phrase, this smells right. There's a reason, because you've seen it and you've done it before. And that's the experience we have on this team. We've been in the Eastern Athabasca making discoveries for many years and decades in some cases. And the former VP for CanAlaska was the discoverer of Cigar Lake, one of the giant mines in northern Saskatchewan. So, we've got a team that knows what they're looking for. And we've got a team that's been part of these big companies. We know what they need. They need a pipeline of projects, ideally tier 1 type projects, those projects that can make money, those mines that can make money at almost any uranium price.
Right.
And that's what the Cameco of the world needs. They need to find production for the future, which is going to feed into this incredible market that's in front of us.
Okay, so you know what they want. Have you got anything like that now?
Oh, we do, we believe. And that's what we're working on at Pike Zone. This has all the fingerprints of one of these major mineralizing events, tier 1 deposits like McArthur and Cigar, and that's what we're continuing to work on. We've also got other projects that are starting to show those signs as well. Again, this doesn't happen often, so when you start to see those signposts, you've got to pay attention to them because you could be right next to that big ore body.
Right, okay, you need to pay attention, you need to throw some money at it, and you need to get focused, for sure. You made me smile a second ago. It's like, is this kind of like generalist commentary? It needs to look right, it needs to smell right, and then I remember what you said about an hour ago. It literally does smell, doesn't it?
It does. And I've used this before. It smells like steamed Brussels sprouts. Right. And when I get calls from the field, my geologists who know what they're looking for, long careers with Cameco and Orano, they go, the core shack stinks.
Right.
It smells like steamed Brussels sprouts. That tells you that the fault, the mineralized fault around one of these deposits is breathing. It's breathing from the core. And it is diagnostic. And that's when you know you're close to something that's pretty significant. And that's why we get excited.
So it's not me; it's the uranium core.
Yeah.
Okay. Cool.
Yeah.
Good. Let's talk about where you go from here, because I think it was the difficult thing with exploration stories is sometimes they've got like one asset, and if it doesn't work, it's really hard to kind of move things from. You've got a lot of assets on a lot of ground, and there's similar sorts of problems. Like, I'm not quite sure where to look. So I get the model where you're kind of optioning out or letting people JV in and using their money but your expertise, or if they want to do it, you let them do it. So there's a lot of moving parts here, but Pike Zone for you is, what should we be looking at? What's important?
What's important is we're drilling the holes, they're generating results. We are moving projects toward discovery. Are we hitting mineralization? Are we hitting alteration that makes sense? Are we getting the money in the ground for our shareholders? Every single hole that we drill has an opportunity to make a discovery or build on a current discovery.
But everyone says that, right? Everyone says that. So I'm interested in you, like $50 million company, has been as high as 80 recently, but like the rest of the market kind of come off a bit. It's tough. But there's a lot of stories. There's going to be more news stories coming out, and you've got to kind of stand out and say, well, where do we sit in this mix, and why are we likely to succeed where others won't?
Well, because we've got the team, we've got the land, we've got the partnerships in Cameco and Denison as examples, and we know what is needed to get into the hands of these producers for the future. And we're out there looking for it, and we're delivering results. We're hitting mineralization on multiple projects.
Right.
With partnerships with Cameco and Denison.
Okay.
And it's coming. The results are coming.
So, you're hitting mineralization, but it's got to be economic mineralization.
Exactly.
So in terms of priority of what's nearest, where the value should be attributed, because I'm sure you'll tell me you're worth a lot more than 50 million. I'd be disappointed if you didn't. What should we be attributing value to now? And in the near term, like in 2023, okay, based on what you've, because a lot of activity last year. Mm-hmm. You're just about to start some more activities, get more drills turning, more money being spent, etc. So what are we going to look to see by the end of this year? What does success look like for you?
Success is building on the Pike Zone. Success is building at Moon Lake South.
Yeah.
Success is building on what we believe we're onto at Key Extension in terms of a new grassroots play, which is very close to that critical infrastructure that needs feed.
Right.
In 15 years' time, post McArthur River,
right.
We're right there.
What do you mean needs speed?
Well, McArthur River has about 15 years of mine life left once at full production, which they're ramping up to. Right.
Are they not the reserves?
The reserves will be depleted.
Okay.
Okay, and there's no more to be found. There's no more to be found. So where is the next tier 1 asset that's going to feed the Key Lake Mill, the Rabbit Lake Mill, the McLean Lake Mill? It doesn't exist in the Eastern Athabasca Basin. Mm. And when we say that we have something that looks like a tier 1 event, we've got to go out there and drill and make sure it is a tier 1 deposit. And if it does, it has a home. It has a home because we know what the Cameco and Oranos of the world are looking for in terms of production. And they need it in their pipeline. They need it to supply the utilities that continue to need, uranium fuel, but also for the new reactors coming online, whether it's SMR or other, that are being built around the world, including Canada. So, it all is going to take more uranium. And if we can find a tier 1 asset, it has an automatic home, and that's our focus.
Right, okay.
That's our focus.
Okay, I hear you. Look, I'm sure you'll come on. We'll get a little bit technical as the drilling comes through as well. But when the market was a little bit tricky last year, you went off and did a few deals, right? You like doing these deals. Obviously, with the Aussie guys, it was great. But the copper nickel projects, I mean, hot, right? It is the thematic. Every conference that I go to that involves battery metals is rammed, and it's rammed with people from automotive manufacturers, anode guys, battery manufacturers. The OEMs, I should say, governments, etc. The debt component of anyone who's got an economic battery metal project, they're fine. And we've seen in Canada recently with the incentives being offered there, it's effectively, if you qualify, 50% of your equity, non-dilutive equity, who thought that would be a phrase, is available for you, but you've got to qualify and go through the phases. So copper, nickel projects, obviously Manitoba.
Yeah, Manitoba for nickel
And
primarily.
a little bit, and you've got the copper over where's that?
We've got a copper project in British Columbia, in the
BC,
Quinault
yeah, okay.
We've also got a copper VMS deposit in Manitoba near Rattan,
Right.
which is a past producing, very large VMS deposit,
Right.
zinc and copper.
So what do you know today about it?
About which?
About Manitoba. What have you?
Manitoba is a great jurisdiction to work in. I mean, it really is.
But
It's
in
got
terms of the
a
asset.
long mining history,
Right.
great assets.
Yeah.
If we just go to the nickel space, we're the second largest landholder in Valley. We just bought a nickel deposit right near our projects, just north of Thompson, Valley's main operations.
Yeah.
And that's 5 million tons at 0.87% nickel in the ground. It's about $1 billion worth of nickel in the ground. Most of that's indicated resource. That's all to leverage our portfolio that sits in that nickel space in Manitoba. So it's a great jurisdiction, great nickel assets.
Yeah.
And we've just added to that in a very significant way.
How do you pay for it?
How much should we pay for it?
Yeah. Well, how?
How?
And how much?
A little bit of cash and shares.
Right.
A little bit of cash and shares. Yeah. Total value probably around $1 million.
Does that stay? Do you think it stays in the company as is now, or is that? What are the? How do you fund that?
So
Here's where I'm going.
So the best way to go about it, Matt, is to find a way to monetize it for our shareholders. They've been very patient as a uranium company, branching out into battery metal space, connected to clean energy and nickel. Obviously a need there globally, but we're probably looking at creating a new vehicle and getting it out and get it running. So my goal is to find a way to monetize that appropriately for our shareholders. And the addition of this asset was a piece to getting us there.
Interesting. Okay, that's that. And timing, not sure. Whenever's right, I guess. You're never going to tell me, are you?
Hey, my goal is as soon as possible.
Okay, fine. Okay, and over to BC. What's happening over there?
Right now, it's in Dominica Minerals' hands. They're the operator, so we're waiting for the program budget, see what they want to do with that. But the first program there that we drilled a couple of years ago hit copper in several of the holes. So we're in the right copper environment. The question is, we need to do more drilling. And when Dominica wants to do that, then they'll put forth a program and budget, and we'll move forward from there. Okay, so it sounds to me you're managing the balance sheet, you're managing cash expenditure, and very much focused on this kind of return on capital invested, which all shareholders should be concerned about. But like I say, there's so many moving parts. I guess that's the challenge for you, saying we've got our flagship projects. We know what we're doing there. We know what we're trying to build for the big guys like the Camecos of this world, and the smaller projects, partnership and deals to be done. So it's a lot of moving parts at the moment. There are a lot of moving parts, but that's the exciting part of the business. There's lots of different ways to build value for shareholders. The best way is through discovery. We can't do it all. So inviting in partnerships or other expertise to help you move that forward, whether it's uranium, copper, or nickel, totally makes sense. And it's one way to leverage the financial world to get the money in the ground to make those discoveries. Right. It's one of the tools we have to deploy. Okay. Absolutely. Now, you've been a kind of retail story. We've known and been speaking to you as a company and for over 3 years now. I think it was about $5-6 million when we market cap when we first started talking to Peter, and obviously things have taken off in the last 18 months, or so. It's also because there's a lot more funds looking here. It's not just it's very much a retail story, but there's a lot more institutional guys, a lot more funds looking at who these players can be. Obviously, you've kind of got the blue chip background, but not quite of the size yet for the funds to kind of deploy capital, but they're looking.
You've been bouncing around Europe again. What are the institutions interested in? Is their starting position quite basic, quite low? Do they understand the opportunity in front of them?
I think they really are starting to understand the opportunity in front of them. And, you know, the old saying is, get in when no one wants to be in. And right now we're in a bit of a strange market. But if you just think of the uranium fundamentals, just uranium in general, battery metals included, incredible opportunity here to get in now, because what is coming is going to be just a massive event, a sustained commodities event. And, you know, I think the institutions are getting that. So they're looking at opportunities like CanAlaska, whereby maybe really undervalued in the market today, given all the results coming out of the portfolio. For a company that's been around a long time, remember, we've been doing this for 20 years. You know, I've been in the space for 30 years, most of that with Cameco, and as well as part of my team. So we've got an incredible record of being in this space, delivering results, and now our drill bit's doing the talking.
Right. Okay. And you're again, we talked about that kind of Lassonde curve moment for you at the beginning of this conversation. But so you know exactly where you want to play, where the leverage is coming, and you're not going to dilate by trying to go and raise capex at some point, which is great. We're very clear as investors where you operate. So in terms of the speed at which things move, clearly, obviously the market there's a couple of moments last year which, you know, all boats float on a high tide scenario came true for everyone. But it also is true when the tide went out, everyone's going to come off again. But for you to set yourself up for maximum success, when do you think I keep saying Cameco, but there are others, Ranas of this world, who come to play and come to buy at the right opportune moment. For you, the timing is what? Shareholders aren't sitting in this for a 10, 15-year build-out phase. They're in it for a shorter period of time, as far as you're concerned with your model. Is that right?
That's correct. You know, if we go out and make a discovery, we want to move that forward as fast as possible. Get it to the point where you understand what might be the resource, or actually deliver a resource to the shareholders, to the market, so we can understand it and value it appropriately. That's my goal, is to make sure that we move our projects forward, our discoveries forward, to the point where we can build maximum value for shareholders. Because, you know, at the end of the day, it's a short 1, 2, 3 year time frame from discovery through to that knowledge.
Okay.
If you do it right.
Okay.
And then our goal is to create an auction out there.
Right.
Get it into the hands of someone that might take it to production, like a Cameco or Rano or other. Yeah. Because that's not our game.
So let me be clear, because again, there's a big audience who are new to all of this, right? So when you say that that's a short time frame, that sounds attractive, but what the expectation is, if that does happen, the shares go up in value, right?
Absolutely.
There's, with the spin out, with the copper or nickel, both, whatever, there's some shares allocated to shareholders for that new vehicle, etc. So there's lots of different moments, exit events, and value moments for me as a shareholder if I come into an organization like yours, because of the size of the portfolio, rather than one major event that you're hurtling towards. Is that correct?
It's always good to have more than one project. We have that. We've got more than one project delivering, more than one commodity in this case, where we can try and build value for the shareholder, whether it's a spin out or other. So it's about creating opportunity for our shareholders to make money. And they've been very patient with CanAlaska as we've moved into the nickel space, as an example. Now we have to find a way to bring that value to the shareholders. And that's what I'm tasking myself to do.
Good man. Good to see you here in London. Yeah. We'll see you in your backyard soon, hopefully. But yeah, nice to see the company move along.
Thanks, Matt. Real pleasure to be here today.